Good morning, dear listeners. Welcome to Civinity Group Investor Relations Conference. I'm Emilia from Nasdaq Vilnius, and I'll be moderating today's event. We will start with a presentation from the management on the new bond issue, which will be followed by the Q&A session. Please be informed that this webinar is being recorded and will be available on the Nasdaq Baltic YouTube channel. I encourage everyone to submit your questions in the Q&A section at the bottom of the screen. With that, I am pleased to introduce today's presenters, Virgeda Jackaitė, Davidas Jacka, and Tomas Staškūnas. Please, the floor is yours.
Hello, everyone, and thank you, Amelia, for introduction. Today we'll be talking a little bit about the Civinity Group. First, we will go through the group overview. Then we will look at our operations. Davidas will touch upon our digital journey, and Thomas will finish off on the financial position and keynotes of the issue. Civinity Group operates into three countries. Our headquarters are in Lithuania, then we operate in Latvia and United Kingdom. Last year's consolidated revenue were 88.5 million, out of which two-thirds roughly are recurring revenue, which I'll touch upon what it means when I talk more about the operations. Net profit was 2.3 million and consolidated pro forma EBITDA was 7.4 million. Here we have a couple of statistics about the group. In Civinity Group, we have 88,000 residential clients, 1,600 commercial clients, more than 500,000 digital users, and in residential and commercial sectors, we manage over 14 million square meters. Civinity Group operates in 20 years, and at the moment we have 1,600 employees. We are very much focused in smart technologies since 2021, and Civinity Group DNA is M&A.
I will just very shortly touch about the keynotes information. In the end of webinar, we will discuss it in more details. So now we are issuing notes of up to 25 million euros. They will be 4-year notes with 10% coupon rate. And the usage of the funds will be to refinance the current public 8 million bonds and also to fund our mergers and acquisition activities. So this refinancing of the bonds would be immediately after we will issue these new notes. We will not wait for the maturity of the current public bonds. And just a little bit more information about our financials. So Civinity Group has quite significant growth in revenue. We have increased more than 20% our revenue from 2022 to 2024. Our pro forma EBITDA increased about 70% in the last 2 years, from 4 million to more than 7 billion euros. We are constantly improving our equity as we are reinvesting most of the earnings, and our equity ratio has reached already 13 million euros. And our net debt to pro forma EBITDA is about 2.3 end of 2024, which leaves enough room to further increase our leverage to make acquisitions.
Civinity started their journey in 2005. First company was acquired, and the Civinity Group strategy is growing through acquisitions. So in 2006 and from 2007 and to 2016, there was quite many companies of acquisition. So in 2010 was acquired Senamiesčio ūkis, Būsto valda in Kaunas, which is operating and many more. What is important to mention that in 2014, Civinity started their operations in Latvia. We acquired Jūrmalas Namsēmnieks, which is operating in Jūrmala, and in 2-3 years we acquired the biggest private companies in Latvia and became the biggest private operator in our sector in Latvia. In 2018, it's very important to mention that me and my strategic partner, Domas Dargis, we acquired Statinių Priežiūra and Design. Now the rebranding is Civinity Engineering and Civinity Solutions. In 2021, we entered UK market with Civinity Engineering. Also from 2022, we started investing in IT companies, and in 2022 we acquired InService from Invalda Fund. It's very important to mention InService was a third player in Lithuania. Also, we merged with my strategic partner, Domas Dargis Servico company, and became a quite significant player in Vilnius in residential sector. Also, we started in 2023 investing in Valandinis, Jonica Service in Latvia, and other companies. It's important to mention that in 2024 we invested in mobile application which is operating in Latvia, Riga, Mobile. It's super app for the city. Also, it's important to mention that we started in 2017 with bond issue, so it was a private placement, and from 2021 we started a public bond issue. Also, in 2023 we issued another public bond issue. In 2024 also was a private placement, which was financing for mobile acquisition, and just recently we refinanced that bond issue for mobile. Just shortly about group structure. So our business model, it's very stable and recurring revenue. So approximately 50%, it's more than 50% is recurring revenue from residential sector, 20% in B2C sector, and 30% of engineering, and 3% of IT services, mobile.
Here I would like to touch upon our management structure. So to start with, we have an independent management board. After the management board, there is myself, CEO of the group, and below me there is functional departments and business units. We operate in shared service principles, so all the functional departments such as finance, IT, HR, marketing, they support our business units. And looking at the business units, we have 5 managers in residential sector in Latvia and Lithuania. We have 4 managers in commercial sector, Latvia and Lithuania. And in engineering, we have 3 managers that operate in Latvia, Lithuania, and United Kingdom.
Shortly about me, my background that I'm 20 years in business. So I was graduated in SSC Riga, Stockholm School of Economics. I was, and my strongest part that I involving smart people from the industry, and together we can reach very big and ambitious goals. Next slide. So Civinity has 4 independent members. So Diana Dominienė 10 years was working in PwC, also in various position in Maximo Group. Dovilė Grigienė now became a member supervisory chairman of the supervisory board of Revolut, and before she was working in Swedbank as CEO and chair of a board. So just recently, Giedrė Vilke joined our group. She has more than 10 years experience in the IT sector. She was working for Pigų Group in various positions. Šarūnas Stanislovėnas is responsible for mobile investment and further growth. His background, he was CEO of Viena Sąskaita. Also, in various positions, he was working in Girteka Group.
About myself, so maybe to start with, worth mentioning that this is a family business. So David, as he is my brother, and myself, I'm taking a group CEO position since May 2023. However, with the business, I was involved since the beginning, seeing how David has built it. Previously, I joined Civinity when we entered UK market with Civinity Engineering. I was leading Sugar House project over there, which is the biggest project of Civinity Engineering, worth almost 14 million euros. Previously, I lived in the United Kingdom for 15 years, and what's worth mentioning as well, that we'll have a little bit of a change in the group, that since September, I'll be leaving for maternity leave for 1 year. This year we'll be having a cover for my position internally, and after a year I'll be back, and during that time, not to go far away from the business, I'll be joining the Civinity Management Board. Here I would like to touch on the operations and the segments of the group. So firstly, as mentioned before, Lithuania is our headquarters, which takes 73% of our group's revenue, where we operate in residential, commercial, and engineering sectors. Latvia takes 26% of the revenue, and United Kingdom 1% of the revenue. United Kingdom only 1% at this moment, because we are in between the projects. Sugar House Island finished in the end of 2023. Now we have signed other projects. However, we are waiting for the green light to start. So at the moment, we are doing the project works. Project works. On this slide, I'll talk more about the residential business, which is the biggest sector of ours, that takes 43 million revenue. And what's worth mentioning, that it's about 80% of recurring and predictable revenue of the in the coming upcoming years. On the right-hand side, we have a graph where we show our revenues on the past couple of years. And what's important here to see that our revenue is divided into two parts: tariff revenue and additional works. So tariff revenue is the revenue that we get from the upon a contract when we start looking after the building, and additional works is done by our building managers. When we enter the building, we examine the building, we look at the defects, and then we give suggestions to the clients how to improve the building and make it more stable, more green, and more sustainable. Over here, we see the financials of the residential sector, and what's worth mentioning that in 2022, as David has said, we joined Servico, where our revenues increased, and as mentioned, Civinity has organic growth and through the acquisitions. So as the organic growth still is coming up, the acquisitions for going through acquisitions, it's a bit high, it's a bit faster, and more effective in our positions. And what we see that Cervico is more focused on the new builds. Therefore, a little bit of the margins have dropped since Cervico joined our business, as new builds don't have that many additional works, as they are still on the guaranteed works. But 2-3 years, we'll see more increase on the additional side. And looking at the commercial sector, last year it was 16.5 million revenues, and similar over here. We on the right-hand side graph, we see that the revenues are divided in tariff revenue and additional work revenue. Similarly here, about 80% of the revenue is predictable and reoccurring. So if we go on the next slide, we'll see the financials, and we saw that we had a little bit of a slowdown in past couple of years. This was due to the management. We saw that the management was drifting a little bit apart. Since the beginning of this year, we do have new management in Lithuania and in Latvia, and we see that they are mainly focused in operations efficiency, improving client relationship, strengthening our company's reputation, and they're doing a good job. And we'll see what we are seeing now, that in 2025 our financial position is coming back to the normal. Over here with the commercial sector, we wanted to show that we operate in different segments of the clientele. So we are about 41% of our clients are in services. Here we listed a couple of the names. Retail and trading takes 22%. Office buildings takes 18%, industry and manufacturing 7%, and others such as public buildings take 12%. So commercial and residential businesses, what I want to highlight again, are very stable and reoccurring. So despite any conditions in the market or economics, they are still generating the revenues. On the other side, looking at the engineering, this is more reflected on the market or the industry conditions. So engineering takes 26.5 million revenues of the whole group. And since the beginning, when we acquired that time called Desire in 2018, we increased the company's revenues six times. And what we saw since last year, that there was a little bit of a slowdown in construction industry, and it was reflected on Civinity Engineering as well. However, what we do see that the markets are picking up, and we are already tendering in projects for 2026, and we see that it will be going back to normal as well. What's important to mention here in Civinity Engineering as well, that when we acquired the company, we kept all the management, and this is one of our main goal when we acquiring the company, is to keep the management in the company and as much as employees as we can, as we believe that they have the best know-how of the businesses. I'll give a word to David to speak a little bit more about the digital.
I'm a big fan of super apps. From my perspective, it's not necessary in the city to have 10 or 15 different apps to get services from what is needed in the city. So that's why I strongly believe that one super app for one city, it's a thing must. So, for example, through like in Vilnius, you have 3 different apps to pay for the parking, and many apps for city transportation and also for utility bills. So we invested, as I mentioned before, in 2024 Mobily. So in Riga through Mobily, you can pay for the parking or city transportation, entrance to the Jūrmala, and etc. And here is some numbers about Mobily app in revenue. So this year, last year was 4 million. and incomes coming from parking, almost 60%, 18% for some transportation. Also, we have very strong development team. And for example, in Riga, through Mobily, you can pay everything what is needed in the city. It's not necessary to have, I don't know, like 5 or 10 different apps. So our strategy to support this kind of apps and grow organically and through acquisitions in different markets. So in this area, we are focused very much.
I will talk a little bit more about our financials. We have grown more than 70 billion euros in revenue in the last 2 years, and the growth was mainly driven by residential and commercial business units. Also, we added payments business unit, a new business unit for us. And engineering business unit was more or less flat in the last 2 years. We had growth in 2023, but decrease in 2024 because of the cycle in the industry. We have managed to improve our gross profit margin. It's really good at 20% in 2024. And the profit margin was already helped by the very healthy profitability margin in the payment segment. And we have achieved this profitability despite the slowdown in the engineering business unit. And talking about pro forma EBITDA, it increased about 70% in the last 2 years. And for pro forma EBITDA, we are calculating full year profitability of newly acquired companies. So in 2024, we have calculated full year profitability of Mobily business in Latvia, which improved our EBITDA margin by about 400,000 euros, while we had additional expenses related to the same acquisition, also about 400,000 euros in the same year. And talking about our net profit, we have improved in the last 2 years by about 3 times our net margin. We have earned a little bit less than last year, mainly because of increased financial expenses related to new acquisition of Mobily. And this new investment in Mobily has already contributed about 600,000 euros to our consolidated bottom line. Talking about our expense structure, the main expense is, of course, our employees. But for cost of sales, we are trying to have a healthy mix of works we are doing with our own employees and also with subcontractors. It gives us more flexibility. Also allows us to take higher volume works which we would not be able to do by ourselves. And the share of our own employee from revenue is actually slightly decreasing. And the same goes about operating expenses. The main expense line is our employees. But the share is already improving from the last year. In the last 2 years, we have already improved from 9.4% from revenue to less than 7% from revenue. So our efficiency is improving with the scale. And we have a quite significant line in our operating expenses, which we call legal and consultation services, which is always quite high because we are very active in M&A activity. So our liquidity ratio end of 2024 was decreased comparing to 2023, mainly because we had to refinance two bond issues during 2025. So private bond issue from EMVL and also public bond issue which matures in October this year. So we have already agreed and prolonged our private bond issue, which is now ends April 2027. And with this new public bond issues, we will refinance the current public bond of 8 million euros. And as I said, our equity ratio is continuously improving despite all the acquisitions, which are a little bit dragging down our equity because we are reinvesting most of our earnings back into the faster growth of the business. Debt level end of 2024 was 19 million euros, and net debt is less than 17 million. For net debt, we are subtracting cash and equivalents, but we are adding back restricted cash, which is relating to the accumulated funds in the residential sector. So our net debt to pro forma EBITDA, as I said earlier, is less than 2.3, it's 2.26. We are having ample room to grow through acquisitions because we have quite low leverage. And talking about our cash conversion, we have a very strong conversion ratio from our operating activities. Most of the cash is converted most of our EBITDA is converted into cash from operating activities. We are operating asset-light business model, which does not require big amount of acquisitions, a big amount of investments into property and other intangibles. We are usually investing about 1 million euro, 1.4 million last year with Mobile acquisition. So most of the generated cash from operations we can direct to the financial liabilities and towards new acquisitions. And now let's talk in more details about the proposal of the notes. We are issuing up to 25 million notes in first tranche. The total amount of the notes will be up to 50 million, and we are planning to issue it in several tranches. The minimal investment amount is 100,000 euros at 1,000 euro nominal value of each bond issued. The fixed rate is 10%. It will be paid semi-annually. So now we are issuing the bonds on 17th of July. So the coupon will be paid 17th of January and 17th of July. It will be for 4 years till 2029. The notes are unsecured and we are with covenants of net debt to pro forma EBITDA not more than 4 and equity ratio not less than 15%. Also, we have more strict equity ratio for dividend payments. For dividend payments, equity must be above 20%. Also, we have additional requirements for asset disposals, for permitted pledge. We have a change of control clause in the bonds. It will be placed publicly in Lithuania, Latvia, and Estonia, and we are going to we are going to list it on the Nasdaq Vilnius main bond list. We are using IFRS accounting standards, and we have been audited by PwC for numerous years already. And also we are going to be, we have already signed agreement with trustee. Trustee is CSC company from Sweden, previously named in Intertrust. And we have put summary of risk factors, where more detailed explanation of each risk factor can be found in the more detailed documentation relating to the bonds on the company website. And I would also like to shortly explain the situation in the Central Europe in the residential business, residential and facility and commercial facility management business area. We do value the total business market, the total market in Central Europe at about 20 billion euros, and it's quite fragmented. No significant consolidation has been done. Each market has different companies and numerous different companies operating. So we do believe that we have quite significant amount of possible acquisition targets in our main backbone sector in Central Europe. And some key projects.
Yeah, some key projects of engineering business that hopefully who lives in Vilnius can recognize. So we did constructions in Paupys. The value of the project was 5 million, and now we are looking after it in the commercial facility management. Also business garden and my previously mentioned project Sugar House Island, where we entered the UK market.
So now we will gladly answer the questions of investors.
Thank you for the presentation. We will now proceed with the questions. I would like to remind everyone before that to submit your questions in the Q&A section at the bottom of the screen. And the first question we've received is, how do you unlock the value from acquisitions, or how do you ensure that the business continues to grow and perform on par or at better level than before the acquisition?
We are using several key strategies for acquisitions. One key strategy is to acquire businesses with strong management team. And we are usually agree with the management teams that we are going to work long term together. So we are putting some business plans, motivation schemes to extract value. Also, we are always trying to acquire companies which could complement our current businesses we already have. So we do see that we are able to have some synergies in back office operations and also synergies between product lines. And as a one clear example is when we have bought in Service Group in 2022, we have started significant work with Dermagroup, which has later on allowed us to gain some business in the residential area with the same Dermagroup. So this is just one example. And in all acquisitions, we are always looking at strong players on the market with strong team and possible synergies with our current business lines.
And to add for Thomas, before acquisition, we involving top management. Together, we preparing a business plan, and just like this, after that, we acquiring those businesses, because for us it's very important to keep top management and to work together with them.
What I would add is that we always look at healthy and cash generating businesses. We don't acquire any loss making.
Thank you. And the following question is also on acquisitions. How fast do you expect to deploy the bond funds into new acquisitions?
Of course, firstly, we will redeem early the 8 million bonds we have already with maturity in October. So we will not wait for October. We will redeem them early. And for the acquisitions, we have already several in our acquisition pipeline. We have several acquisitions in different stages which are ongoing. At the moment, we are not ready to announce anything yet, because we still need to make some steps. But we do expect that already by end of this year we will close at least a couple of smaller acquisitions.
Thank you. And what other super app concepts, verticals are you planning to expand into?
At the moment, Mobily team is working on implementation of utility bills in Latvia. So our strategy is that through one app you can pay all city transportation, parking, and also utility bills. So it's not necessary to keep several different apps.
And will this expansion have an effect on the core business acquisitions?
At the moment, not yet, but in the nearest future, we hope that we will get more synergies.
It will be complementing our core businesses for sure.
Yes, because our clients can use all those services.
Thank you. And could you talk a little bit about the listing plans? Your current bond issue is listed on First North, and in the prospectus it is mentioned that these bonds will be listed on the regulated market.
Yes, correct. We are planning to list them on the regulated market, and we are planning to list them as soon as reasonably possible after the issue of the bonds.
It seems as most of the questions have been answered so far. So if you have not sent in your question, please do so now. And we have a new question. Could you talk about the biggest risk to your business and the main risks facing your businesses?
So I can take over on the operation side. So we are very diversified. As mentioned, we have 4 segments. So fourth one is being digital, the newest one. First 2 residential and commercial, they are very stable. And engineering, yes, it's a little bit riskier depending on the industry, but it does balance it out. So let's say if there is a slowdown in the industry for engineering, what we do see from the last year's revenue, residential comes up as like in balancing it out. So I think diversification is one of the key factors for Civinity Group.
Okay. It seems as all the questions have been answered. On behalf of NASDAQ and Civinity, thank you everyone for joining. It was a pleasure being with you today. The recording of the presentation will be available on the NASDAQ Baltic YouTube channel, as well as the presentation will be published by the company. Thank you for an informative conference.
Thank you.
Thank you very much.
Thank you.